Hello friends, so we'll be continuing with the same cost of capital chapter, and under that today we'll be seeing one more sum based on WACC, which is nothing but the weighted average cost of capital. Okay, but this time in my previous video what we had done is we had learned how to solve the sum with the help of pen and paper, but this time we'll be learning how to solve the same sum using the help of an Excel. Okay, it means we'll be solving the same sum with more speed and more techniques. Okay, my dear friends. Fine. So in case if you haven't watched my previous video of introduction of WACC, so here is the link and I will also upload this link in the description. So please go through that small video of introduction of WACC where we had also solved two important sums. It's just a 14-minute video. Okay. And then after watching that video, you should be well versed with the formulas like cost of debentures and cost of equity shares. Alright. So let's start with the agenda of this session and let's go on to the Excel slide now. Here we go. So the question says that the JKL Limited's capital structure as on March 31, 2014 are as follows. Okay. So the capital structure of this company consists of equity shares, which is nothing but the equity share capital, and they have raised 2 lakh equity shares. Fine. For which they have accounted 40 lakh rupees in the capital structure. Okay. Then the capital structure also consists of 11.5% preference shares of 10 lakh. And it also consists of 10% debentures of 30 lakhs, and totaling all these three figures comes out to be 80 lakhs. Now, the question says that the equity share of a company is currently selling at a price of rupees 20, which means that the current market price of the stock JK Limited is rupees 20. Okay. Now, they said that it is expected that the company will pay a next year dividend of rupees 2 per equity share, and which is expected to grow at a 5% rate forever, right? So what they are telling is that next year we are going to pay a dividend of rupees 2 per equity share, and we are expecting this dividend to grow at a 5% per annum rate then after forever. Okay, and they also told us to assume the corporate tax rate as 35%. Now these are all the useful information which will be helpful in solving the sum. Alright, so what are they finally asking us to do? They are asking us to compute the WACC, which is nothing but the weighted average cost of capital, for the same company JK Limited based on the existing capital structure. And which is the existing capital structure? Yes, this one is the existing capital structure. Alright, fine. And the second part of the question says that we have to compute the new WACC. New WACC means there is going to be some change in the existing capital structure. So as per that change in the existing capital structure, we have to find the WACC of the new capital structure, right? So they are telling that the compute new WACC if the company raises an additional of rupees 20 lakhs debt by issuing 12% debentures, which will increase the expected equity dividend to rupees 2.40 and leave the growth rate unchanged to 5% per annum forever. Okay, but the price of that equity share will fall to rupees 16 per share. So what they are saying is that in this existing capital structure, they are adding one more component, that is cost of debt. Okay, so they are issuing 12% debentures, which will increase the expected equity dividend, which means that the dividend which was 2 rupees earlier will now increase to 2.40 rupees. But the growth rate, which was earlier given as 5% over here, okay, will remain the same. So there is not going to be any change in the growth rate, only the dividend will increase, and the capital structure of existing, which was 80 lakhs, will now increase by 20 lakhs, okay, because they are issuing 12% debentures over here, right? And because of this changes, what will happen is that the equity price, which was earlier 20 rupees, look at my cursor very carefully. Earlier the equity share price was rupees 20, it now changes to rupees 16. Fine. So what you have to do is, in the first part of the question, we have to solve or find the WACC for the existing capital structure, which is nothing but this one. Okay, and after doing this, we have to solve the second part of the question and find the WACC for the new capital structure as per this changes. Right? So let's solve this sum step by step now. So the very first step, we will give the heading weighted average cost of capital as per the existing capital structure. Alright, and we have seen that the existing capital structure consists of three components. The first one is called as the equity share capital. The second one is the cost of preference shares, which means nothing but the preference share capital. And the third one is the cost of debentures, which they have issued 10% debentures as per the question. Alright, and they have already been given the information of the amount. We have seen that the equity share capital is issued worth rupees 40 lakhs. Same way, preference shares for 10 lakhs and debentures for 30 lakhs. So 40, 10 and 30, we will record the same figures over here, 40, 10 and 30. Okay, so just give the column heading as rupees in lakhs and write in short 40, 10 and 30. Okay, and the total of these three comes out to be 80. Right? Now, let's move ahead and find the weights. Let me make you understand one thing very clearly, that the existing capital structure, which consists of 40, 10 and 30 and has a total of 80, what you have to do is we have to find the weight. कितना percentage weight दिया गया है हर component को, मतलब what is the weight of this equity share capital in the capital structure? We have to find out that. What is the weight of preference share capital in the existing capital structure? We have to find out that. And what is the weight of cost of debentures, that is 10% debentures in the existing capital structure? We have to also find out that. And how do we do that? Simple. What we will do is we will catch the individual components. So what I will do is I will write is equals to over here, is equals to catch the component of equity share capital and divide it by the total. Okay, so here we go, we get the total weight as 0.5. Alright, and what you can do is you can do one shortcut over here in order to easy and simplify your work. I will just delete this part just a second. Okay, so what I do is I write is equals to select this column upon the whole total. Now remember one thing, since I have to find the cost, that is the weight, I have to find the weight of all these individual components. What I will do is my denominator, that is this 80, will be going to remain the same. So what I do is I will fix the same part, means this is the constant part, and I will fix that part by pressing what? Fn and F4. So I press Fn and F4 and I select this. So what I get is I automatically get the answers for all the remaining columns, right? So I will just delete this part because this is not relevant to us, and the first part, right? So here we go. So always remember one thing, that the weights, the combination of all these weights should be equal to 1. So what we do is we simply calculate this by using the sum formula, is equals to sum, and go back over there. Yep, so we get the answer as 1. Right, my dear friends? Fine. So far, so good. Now what you have to do is we have to find the cost. मतलब एक कंपनी ने इक्विटी शेयर रेस करने का कितना खर्चा उठाया. So we have to find the cost of these equity shares. We have to find the cost of this preference share capital, and we have to also find the cost that the company has incurred for raising debentures. Okay, they have raised 10% debentures. Fine. So now how do we get these figures? Yes, for that we should be very much clear with the formulas of cost of equity and the cost of debentures. So here we go. Let's go on to the first working note. We know that the cost of equity, the formula says KE, because cost of equity can be written as KE. And the formula is nothing but dividend upon the current market price plus the growth rate. Okay, and the dividend, as per the existing capital structure, the dividend that was discussed in the question over here, observe my cursor very carefully. Dividend is rupees 2. The current market price is rupees 20, and the growth rate is assumed as 5% per annum. Okay, so we'll just account for those figures. In place of dividend we write 2, substitute. In place of P we write 20, and in place of G we write 5% over here. Okay, so if we do the mathematics calculation, we will get the answer as 0.5, and we can write the 0.15 as 15%. Alright, in percentage terms. So that's what we get. The cost of capital, that is the cost of equity capital, is nothing but 15%. So what I did is I went over here in the Excel file in the table and I copy this 15 over here and paste it. Okay, so the cost of equity share capital is nothing but 15%. Right? Now let's move ahead and learn how to find the cost of preference shares. So cost of preference shares can be found out very easily, because in the question they have already been given that the preference shares have been issued at 11.5% rate. Means that the company has incurred a cost of 11.5% for issuing the preference shares. So directly what we do is we write 11.5 over here. Okay, so what we are remained with is we have to find the cost of debentures now. Okay, and for that we should know that the formula for cost of debentures is nothing but KD, as cost of debentures can also be written as KD is equals to what? I into 1 minus T. I is nothing but the interest rate and T is nothing but the tax rate. Okay, so we'll just substitute the values, and we have already been knowing that the debentures have been issued at a 10%. Okay, so the interest that the debenture holders are going to get is 10%, which means in place of this I, we'll substitute this value of I as 10%, and the tax rate given to us in the question here, look at my cursor, yeah, it is given as 35%. So just substitute those values and get the final answer. Okay, so 10% into 1 minus 35% comes out to be 6.50%. Okay, so what I do is I pick this 6.50% and go and paste it over here. Alright, so I got the cost of all the relevant components. I got the cost of equity share capital, I got the cost of preference share capital, and I got the cost of debentures that the company is incurring. Alright, now finally what I have to do is I have to find the WACC, which is nothing but the weighted average cost of capital. For that, what I will do is simple task. Multiply the last two columns, previous two columns, matlab weights into cost. So what I do is I multiply this weights into cost is equals to, so I press is equals to over here, weights into cost, enter. So what I get, similarly you have to do for all the three columns and get the final answer as 11.375. Okay, how did you get that? We simply use the formula of sum and select the cells, press enter. So I get the answer as 11.375. So what can we conclude is, since the first part of the question has asked compute the WACC for JK Limited based on the existing capital structure, so we can say that as per the existing capital structure, the weighted average cost of capital for JK Limited is nothing but 11.375. Okay, my dear friends, fine. Now, the second part of the question says find the new WACC, which means the WACC adjusted for the new capital structure. Alright. So what does the new capital structure adds? It only adds one thing, that is 12% debentures. Alright. In my previous existing capital structure, there was only 10% debentures, but now the question is saying that the company is raising additional 20 lakhs by issuing 12% debentures. So what we do is we just add this one row over here, cost of debentures for 12%. Alright, rest all things are going to remain the same. Fine. And we know already that the weights assigned to this are 40 lakhs, 10 lakhs and 30 lakhs as per the existing capital structure. Only one addition, since they are raising more money by issuing 12% debentures, we are getting 20 lakhs over here. Okay, fine. So the total comes out to be 100 lakhs now. Alright. Now similarly, just as we found out the weights for this columns, okay, we have to find out the weights for equity capital, cost of preference shares, for the debentures and the debentures of 12%. Right. So we know how to find out these weights. I am not explaining you once again. Okay. So you can practice this by yourself. Just find out the weights. Just remember one thing, that the total of all these weights should be equal to 1. Right? Now, let's come on to the main part of this question now. We have to find the cost, which means what? We have to find the cost that the company has incurred to raise equity share capital, to raise the preference shares, to raise the 10% debentures and to raise the 12% debentures. And how do we get that cost? For that, we should again be well versed with the formulas of cost of equity capital and the cost of debentures. Alright. So here we go. The cost of equity capital is nothing but KE is equal to D upon P plus G. And the dividend that is nothing but as 2.4, because previously the dividend for existing capital structure was rupees 2. But after the changes in this new capital structure, they have said that the dividend is going to be rupees 2.40. So in place of D, we will write 2.40. And the price, even the price is going to change. The current market price, which was earlier rupees 20, is now going to change to rupees 16. So D upon P, the value of D is 2.40, and the value of P, which is the current market price, is rupees 16, and the growth rate is going to be remained unchanged, which is nothing but 5%. So we'll accommodate for the changes, apply those changes in the formula, 2.4 the new dividend, the new current market price, and the same growth rate, and get the final answer as 20%. And we copy this 20% and paste it over here in the table. Okay. Now let's move on for finding the cost of preference shares. And that is simple because it is already given in the question that a company is issuing preference shares at a cost of 11.5%. So the cost of raising a preference shares is 11.5. Okay, this is coming from the question itself. Now the cost of debentures for 10% we have already found out to be 6.5 over here. Okay, so we'll simply copy this and paste it over here, right? Now the ultimate challenge is finding the cost of debentures for 12%. Means the company has raised additional capital for issuing 12% debentures. Okay, by issuing 12% debentures. So what we will do is we will find the new cost of debentures by applying the same formula, KD is equals to I into 1 minus T, but just in place of I, which is nothing but the interest rate, we will replace that I by 12%, as the company is issuing debentures for 12%, right? And the tax rate remains the same, which is nothing but 35%. So accommodate for that changes and find the final answer as 7.80. Okay. Now what we will do is simply copy this 7.80 and paste it over here on the table. So finally we proceed on finding the WACC, which is nothing but the weighted average cost of capital. And we know that how to find the WACC. We'll simply multiply the previous two columns, matlab the weights and cost. So if I say precisely, it means that we will multiply the weights of equity share capital into the cost of equity share capital, which will give us the WACC of this equity share capital. Similarly, we have to find the WACCs, that is weighted average cost of capital, for all the remaining of these three rows. Okay. So finally what we do is we simply apply the formula of sum and select the cells. Press enter and get the final answer as 12.66. Okay. So finally we can say that as per the changes from the existing capital structure, the new capital structure that we are having on our screen right now, okay, the new capital structure gives a new WACC, that is a new weighted average cost of capital, as 12.66. Okay, my dear friends, fine. So this was how we solved both of these parts very nicely and understood how to solve with the help of shortcuts in the Excel, right? Because in industry, when you go into the industry, right, you will not have the pen and paper. You will have to get accommodated with the Excel very nicely. So using the shortcuts and doing things very perfectly and nicely and quickly is a key task for you. Alright. So I hope you like this video, and if you like this video, you can subscribe to my channel and press a bell icon. Okay. Thank you. All the best.